Are stocks set for another strong year in 2021? JP Morgan says yes. Is it time to invest in banks now that irresponsible lending is on the way back? Is there a virus spreading in Canberra called common sense? And can we expect any big surpluses or surprises, in this week's budget or next week's budget? Finally, are self-managed super funds about to get more attractive and cheaper per head? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. I have to wear my glasses next week. Those are becoming very hard to read.
That was a good intro, Peter.
All right, let's go to the first one, Paul. JP Morgan,
Yep.
10% rise in US stocks. What do you reckon?
Yeah, look, it's about 9.5% from where it is today, I think, if on the number. Look, I mean, the US market's in a long-term uptrend. We've kept saying that. I don't think the election really matters that much. I think it could cause some volatility.
Yeah.
But, Trump, market's going to like that. Biden, they're going to be a bit nervous, but they'll get back to...
He's going to spend more.
He's going to spend more, and so the Americans will get over that.
Yeah.
And it'll help the
Love
rally.
spending, the Americans.
So I think 10% is probably a reasonable forecast. This doesn't mean we're not going to have some bumps. We will. We always do. But the US market's in an uptrend.
And I read something you'd love, Paul. They said cyclicals are going to do well. That could be good for our banks as well, I reckon. But Paul, more importantly, they said healthcare in the US is going to look good, and that'll be good for CSL.
That'll be good for CSL. I mean, healthcare is one of those sectors, Peter, that on a Biden win, it'll do badly, right? So, and that'll have it doesn't mean it should have implications for the Australian healthcare stocks, but the chances are it will, because we tend to look at what's going over there and we copy quickly. But so that's one of the sectors. Healthcare and energy are probably the two sectors that get marked down if Biden wins, right? Because he's sort of got policies that aren't particularly supportive for some parts of
like
that.
wind and solar and all that sort of stuff, wouldn't
So conversely, if Trump wins, they go up. So that's something just to be wary of, that there could be some, when it's not going to be across the board market rally. But I think the US market, they want to buy it, Peter, and look, I don't think it really matters what happens with the election. It's going to cause some nerves between now and November. But I think the forecast could prove to be fairly close.
Yeah, JP Morgan said don't worry about the election. And also they said, Paul, if you are going to look at, say, an energy company, look at the ones who are actually going to get into solar and all that sort of stuff, because I reckon that kind of technology is going to be favoured by the market. Anyway, next one, is it time to invest in banks? Now the irresponsible lending's coming back.
Yeah, we're a gun-ho about irresponsible lending, because responsible lending was just... irresponsible. And look, what we mean by that is basically the banks had to take all the responsibility, said, look, borrowers, don't worry about any problems. It's our fault as a bank if we lend the money to you and you can't pay it back.
Yeah, if you lie to us, it's our fault.
Not because you do anything stupid, right? And so that went to the extreme situation where banks want to know every single detail about how you spend your money. Yeah. We had the famous sort of case with Westpac around the Shiraz and the Wagyu beef.
A judge said that was crazy.
The whole thing's been crazy. That's why it's been so hard to get a loan. We've had a mini credit squeeze in Australia now for a couple of years. If you didn't have any income, the idea of asset lends, they went out the door. They weren't allowed.
You have $100 million worth of assets. If you didn't have income coming in, you wouldn't get a loan.
So look, this is good for banks long term. It will have no effect in the short term. Legislation's got to be changed. It won't happen till the earliest till March next year. Won't have any impact on this year's P&L, but longer term it's a positive. And I guess the banks are looking just a little more attractive.
Yeah.
Look, they're at book value, Peter. I think the three majors around book value are reasonable buying. But at the moment, I still think they're going to follow the ups and downs in the market.
It'll take time from the company.
Take time. So our markets, if we get some nerves because of Wall Street, banks will get sold off. But I think they're more in the buy territory now, Peter, than the sell market.
And if a bank screws you, just go to the Australian Financial Complaints Authority. They always say yes. You'll always be right there.
That's the bank's fault, Peter. That's right. You just need to complain. We should have told you that.
All right, Paul. Our common sense seems to be spreading in Canberra.
I think that's a big call to be labelling Canberra as common sense.
I love the fact that the PM has told 250,000 public servants, 250,000 to go back to the office. That's great.
But will they actually get back there, Peter? Look,
of course they will. The Commander-in-Chief has told them to. And secondly, if you're on the dole, youth allowance or job seeker, and you go out bush, go fruit picking, you can keep $300 a fortnight and you can keep your dole payment. I reckon there should be no cap. Just let them keep it whatever
Yep,
they like.
all right, let them help with the farmers. Look, don't worry about if they're getting job seeker. Who cares, right?
Yeah.
They'll pay tax on the other income, but I'd much rather people were doing a bit of work, helping the economy out, and I don't really care whether they're getting job seeker or not. So I'd get rid of all the rules and just let them go out there and do it.
Yeah.
So
life in the bush might mean that their mobile phones won't work for a while, and they'll actually get to learn about real life rather than virtual life.
The question is the budget going to throw many surprises next week, Peter?
Yeah, I think so. Look, they always release stuff, but they'll keep a couple of big things back for headlines for the Daily Telegraph. You know, like the other ones used to be what, cigarettes.
Yep, cigs,
fags and grog
and pokies, I think, with a 3 or something.
Yeah.
Or
they'll keep some, but what we're seeing is that they are actually putting a lot of injection into the economy, making 2021 a good growth year, provided we get a vaccine.
There's going to be a lot of cash handing out. We're going to get lower taxes. You know, if you're an employer, don't employ someone this week. Wait till the budget next week is out of the way, because there should be some sort of subsidy for taking on new jobs. Look, I think there's going to be some other things to encourage investment. So, look, for personal investors, there could be some positives. So, I think this is a budget to have more interest in than last year's budget, right?
Yeah, exactly right. And then Paul also wanted to throw this very interesting topic around self-managed
this is really important, Peter. A bit of legislation made its way into the Parliament a couple of weeks ago to increase the number of members a self-managed super fund can have from 4 to 6. That's interesting. That was on back of a government promise over a year ago. But what was really interesting, Peter, was they're proposing to change the rules about trustees. Now, one of the problems with the self-managed super fund currently is every member has to be a trustee or a director of the trustee company. So if you want to bring your kids into the self-managed super fund, they've got to become directors.
Sometimes they've got too much say.
They've got too much say. They're proposing to change the rules. So up to 2, you've all got to, both parties have got to be it. But above 2, it's only half. So potentially you could have a fund of 4 members. You could bring a couple of your kids into your fund, and you don't need to make them a director or a trustee. I reckon this is a really important change. It won't become law till about March next year. It's got to go through all the processes. But this could make self-managed super funds really attractive again as a way of getting more members in, bringing the cost down.
Makes it cheaper. If you've got 6 people, say for example, you got an accountant to help you for $3,000 and a financial advisor for say $5,000, there's $8,000. That $8,000 is divided into 6 people. Well, then that's a really low per unit cost to have your superannuation.
Could be a really good reason why you're suddenly talking to your adult kids or even your kids below 18. As long as they've got a TFN, they can be a member of a super fund, or your grandkids, and bring them into your super fund. This, I think, is a really important
we'll write
change.
a story about next week, that's for sure. I'm Peter Switzer.
I'm Paul Rickard.
And
we're mad about money.
Shh.